You know, I've been asked 1,000 times over the years, Jesse, don't you read the newspapers? Don't you care what the experts are saying? What about earnings reports, economic forecasts, all that fundamental analysis everyone swears by? And my answer has always been the same. I don't ignore those things because I'm arrogant or because I think I know better than everyone else. I ignore them because they've cost me more money than I care to remember, and I've learned the hard way that the market doesn't move on news, it moves on human nature. The tape tells me everything I need to know, and if you can't read the tape, all the news in the world won't save you from losing your shirt. Let me take you back to my early days, when I thought I was smart because I could read a balance sheet or understand what a company did. I'd read about some new invention, some promising industry, and I'd think, this is it. This is the big one. I'd buy the stock, convinced that logic and reason would prevail, that the market would recognize the value I'd so cleverly identified. And you know what happened? I got slaughtered. Not every time, but enough times to learn that what should happen and what does happen are two entirely different things. The market doesn't care about your analysis. It doesn't care about fair value or what the newspapers say. The market cares about one thing: supply and demand, expressed through price and volume on the tape. Here's the truth that most people never grasp. By the time news reaches you, the market has already moved. The big money, the smart money, they knew days, weeks, sometimes months before you read about it in the financial pages. When you see a headline screaming that a stock is a can't-miss opportunity, the professionals have already positioned themselves and are waiting for people like you to come in and buy their shares at inflated prices. The news doesn't predict the market. The market predicts the news. That's the fundamental principle I built my entire career on, and it's the reason I could walk away from the table with millions while others walked away with nothing. I remember one particular instance that burned this lesson into my mind forever. It was early in my career, and there was this mining stock that everyone was talking about. The newspapers were filled with stories about the rich ore deposits, the modern equipment, the experienced management team. Every fundamental indicator said this stock was going nowhere but up. So I bought in, fairly heavy, thinking I was being smart and informed. And for a while, the stock did go up. I felt like a genius. But here's what I didn't see because I was too busy reading the news. The tape was telling a different story. The volume was drying up on the rallies. The stock would jump on opening, then slowly drift lower throughout the day. Big blocks were being sold into strength, but I was too focused on the fundamentals to notice. Then one morning, the bottom fell out. No warning, no news, just a massive sell-off that took the stock down 30% in a single session. The next day, the newspapers finally reported what the tape had been screaming for weeks. Insiders were dumping shares, the ore deposits weren't as rich as claimed. The whole thing was built on exaggeration and hope. I lost a significant sum on that trade, but I gained something far more valuable. I learned to respect the tape above all else. The tape had been telling me to get out for weeks, but I was too stubborn, too convinced that my fundamental analysis was superior to the market's wisdom. Now, let's talk about what I mean by the tape, because I think a lot of people misunderstand this concept. When I say I follow the tape, I'm not just talking about watching prices tick up and down minute by minute. That's gambling, not speculation. I'm talking about understanding the larger patterns, the behavior of price over time, what I call the higher time frames. See, the market speaks in rhythms. There are short-term fluctuations that mean nothing, like waves on the surface of the ocean. Then there are the deeper currents, the tides that actually move the water. Most people drown in the waves because they're so busy watching every little ripple that they forget to look at which direction the tide is flowing. The higher time frames, your weekly charts, your monthly charts, these show you the real story. They filter out the noise, the emotional reactions to news, the panic buying and selling that characterizes the shorter time frames. When I look at a higher time frame chart, I'm looking for the path of least resistance. Is this stock in a clear uptrend? Are the pullbacks shallow and short-lived? Is volume expanding on the advances and contracting on the declines? These are the questions that matter. not what some analyst thinks about the company's debt-to-equity ratio or whether the Federal Reserve might raise rates next quarter. Here's an example that perfectly illustrates the difference. Let's say there's a stock that's been in a strong uptrend for 6 months. Every week it makes a new high, pulls back slightly, then makes another new high. The pattern is clear as day on the weekly chart. But during that 6 months, there might be dozens of news items. Quarterly earnings that beat or miss expectations, analyst upgrades and downgrades, economic reports, geopolitical events. Each of these news items might cause a day or two of volatility, sharp moves up or down that seem significant in the moment. But if you zoom out to the higher time frame, what do you see? You see that none of it mattered. The trend continued regardless of the news. That's because the trend was driven by something deeper than news. It was driven by sustained buying pressure from informed, patient money that understood something the public didn't. Conversely, I've seen stocks in clear downtrends on the higher time frames get occasional bursts of positive news. Company announces new product, earnings better than feared. And the stock might rally for a day, maybe two. The public piles in, thinking the worst is over, that this is the bottom. But the higher time frame trend hasn't changed. Within days or weeks, the stock resumes its decline, and all those people who bought on the good news are trapped. Why? Because the tape was telling you the stock was in distribution, that smart money was exiting, and no amount of positive news was going to change that until the distribution was complete. This brings me to why I'm so adamant about ignoring fundamental noise. The fundamental analysts, they want everything to make sense. They want to know why a stock is going up or down. They need a rational explanation that fits into their framework of how the world should work. But the market isn't rational, it's psychological. It's driven by fear and greed, by hope and despair, by the collective emotions of millions of participants. Those emotions don't show up on a balance sheet. They show up in price and volume, in the patterns that emerge when you watch the tape with clear eyes and no preconceptions. I've watched men ruin themselves because they couldn't accept this. They'd be short a stock that was in a roaring uptrend, and they'd keep adding to their position because the stock is overvalued, or the fundamentals don't justify this price, and they'd be right, eventually. Every bubble bursts, every overvalued stock eventually comes back to earth, but the market can remain irrational longer than you can remain solvent, as I learned more than once. The tape doesn't care about your fundamental analysis. It's going to do what it's going to do. And your job isn't to argue with it. Your job is to align yourself with it. Now, you might be thinking, Jesse, are you saying fundamentals don't matter at all? That we should just ignore everything except price? Not quite. Here's the nuance that most people miss. Fundamentals matter in the long run, but they're useless for timing. See, a stock can be fundamentally strong and still go down for months or years. It can be fundamentally weak and rally beyond all reason. The question isn't whether the fundamentals are good or bad. The question is, what is the market doing with this stock right now? Is it accumulating or distributing? Is the trend up or down? That's all that matters for someone like me, someone who's trying to make money speculating in the markets. Let me give you a concrete example from my own experience. There was a time when I identified what I believed was a fundamentally sound company in a growing industry. Everything checked out. Strong management, solid financials, expanding market share. But when I looked at the weekly chart, I saw distribution. The stock had been in a long uptrend, but now it was making lower highs and showing heavy volume on down days. The tape was telling me that insiders and institutions were selling, so I didn't buy it. In fact, I shorted it, and over the next year, that fundamentally sound company's stock got cut in half. Eventually, news came out about accounting irregularities and management issues, but the tape had told me to stay away, or better yet, to profit from the decline months before any of that hit the papers. The reverse is also true. I've seen stocks that look terrible on paper, companies with debt problems, declining revenues, all sorts of fundamental red flags, but the tape showed accumulation. Someone who knew something was buying. The weekly chart showed a clear basing pattern after a long decline, with volume picking up on the advances. So I'd buy, ignoring the fundamentals, trusting the tape, and more often than not, within months, some catalyst would emerge. A restructuring, a new product, a takeover bid. The market knew before the news broke, and the tape told me to follow the smart money. This is why I've always said that speculation is about probabilities, not certainties. I don't need to know why a stock is going up to profit from it. I don't need to understand the company's business model or read their annual report. All I need to know is that the tape is showing strength, that the higher time frame trend is intact, and that I can define my risk clearly. If I'm wrong, the tape will tell me quickly, and I'll get out with a small loss. If I'm right, the tape will confirm my position, and I'll let my profits run as long as the trend continues. But here's where most people fail. They can't separate their ego from their analysis. They read some news, they form an opinion, and then they become emotionally attached to that opinion. The market goes against them, and instead of listening to what the tape is saying, they dig in. They add to losing positions, they average down, they rationalize why the market is wrong and they're right. I've done this myself, more times than I want to admit, and it's cost me fortunes. The market doesn't care about your opinion. It doesn't care how smart you are or how much research you've done. It's going to go where it's going to go, and if you can't accept that, you have no business speculating. The discipline to follow the tape instead of your opinions, to trade what you see rather than what you think should happen, that's the difference between professionals and amateurs. Amateurs need to be right. They need to understand why. They need their trades to make sense within their worldview. Professionals just need to make money. We don't care if the market is being rational or irrational. We don't care if the news supports our position. We care about what the tape is telling us, and we have the discipline to act on that information even when it contradicts our personal beliefs. Let me tell you about the concept of time frame alignment, because this is crucial for understanding why higher time frames matter so much. Imagine you're looking at a daily chart, and you see what looks like a breakdown. The stock drops sharply on heavy volume, breaks through support, looks like it's headed much lower. The news that day might be particularly negative, disappointing earnings, a scandal, whatever. Everyone's panicking, selling at any price. It feels like the end of the world for this stock. But then you zoom out to the weekly chart, and what do you see? You see that this breakdown is actually just a normal pullback within a larger uptrend. The weekly chart shows higher lows and higher highs intact. The selling, while dramatic on the daily time frame, barely registers on the weekly. This is where fortunes are made and lost. The people who are focused on the daily noise, who react to every piece of news, they sold in panic. They locked in losses at exactly the wrong time. But the person who understands higher time frames, who sees this as a buying opportunity within a larger trend, they're accumulating shares from the panicked sellers. A few weeks later, the stock has recovered and made new highs, and the news has changed. Now everyone's optimistic again, reading bullish articles and buying at higher prices. Meanwhile, the higher time frame trader has already positioned themselves and is either enjoying the ride or looking to take profits. This is why I always say, the market is designed to transfer money from the impatient to the patient, from the emotional to the disciplined. The news creates the emotion, the volatility that shakes out weak hands. But the higher time frames, the tape, that's where patient money operates. That's where you can see through the noise and understand what's really happening. It's like being in a crowded, noisy room where everyone's shouting different opinions. You could listen to the crowd and get confused, overwhelmed, pulled in a dozen directions. Or you could step back, get to higher ground, and see the pattern in the chaos. That's what higher time frames do. They give you perspective. I want to be clear about something. This approach requires work. Reading the tape isn't some mystical ability you're born with. It's a skill you develop through careful observation, through studying price patterns, through making mistakes and learning from them. When I was starting out, I'd spend hours just watching the ticker, noting how stocks behaved, how volume related to price movement, how different types of market conditions affected different stocks. I wasn't reading analyst reports or company filings during this time. I was studying the one thing that mattered, what the market was actually doing, not what someone said it should do. And I'll tell you something else. The hardest part isn't learning to read the tape. The hardest part is having the courage to act on what the tape is telling you when it contradicts the prevailing narrative. There have been times when every newspaper, every expert, every person I respected was saying the market was going higher and the tape was showing me distribution. It takes guts to short into that environment, to stand against the crowd. Similarly, when everyone's pessimistic and the news is all doom and gloom, but the tape is showing accumulation, it takes courage to buy. But that's exactly when the best opportunities present themselves, when what the tape is saying diverges sharply from what the news is saying. Before we move to our final section, I want you to think about this. How much of your trading decisions are based on what you read versus what you observe? How often do you let a news headline influence your position before you've consulted the tape? How many times have you been right about the fundamentals but lost money because your timing was wrong? These are the questions that will determine whether you succeed or fail in this business. If you're honest with yourself, you'll probably realize that the news has cost you more than it's made you. That's not a criticism, it's just reality for most people until they learn what I'm teaching you right now. And listen, I know some of you watching this are thinking about your own trades, your own positions, wondering if you should be paying more attention to the tape and less to the talking heads on financial television. You should be. Comment below and tell me, what's one trade where you ignored the tape and followed the news? And how did it work out? I'd love to hear your stories. And make sure you're watching our other videos on this channel where we dive deeper into specific trading strategies and market psychology. This isn't just theory, this is how real money is made and lost. So let's bring this all together, because I want you to walk away from this video with a clear understanding that can change how you approach the markets forever. The fundamental principle is simple but profound. The market is always right, and it speaks through the tape. The news, the opinions, the expert analysis, these are all secondary sources, reflections of what has already happened or speculation about what might happen. The tape shows you what is happening right now, and more importantly, it shows you the direction of least resistance, where the smart money is positioned. When I look back at my career, at the millions I made and the millions I lost, the pattern is crystal clear. Every time I aligned myself with what the tape was showing me on higher time frames, I made money. Every time I let news or opinions or my own clever analysis override what the tape was telling me, I lost money. It's that simple. The market has humbled me enough times that I've learned this lesson thoroughly, though I'll admit it took me longer than it should have. But that's the nature of this game. We all have to pay tuition to the market. And the only question is whether we learn from those expensive lessons or keep repeating them. Now, let's address what some of you are thinking. But Jesse, what about black swan events? What about unexpected news that moves the market dramatically? Fair question. Yes. Occasionally something happens that the tape couldn't predict: a war, an assassination, a natural disaster. These events create volatility and can disrupt trends temporarily. But here's what I've observed over decades. Even in these situations, the higher time frame trends tend to reassert themselves surprisingly quickly if they were strong to begin with. A solid uptrend might get interrupted by a crisis, might pull back sharply on fear and panic. But if the underlying accumulation was real, if there was genuine buying power behind the trend, it recovers and continues. Conversely, a weak market in a distribution phase might rally on some positive news event, but that rally will be short-lived if the tape is showing distribution. The key is to have a framework for dealing with these situations. I never let a single news event, no matter how dramatic, cause me to abandon a position that the tape is supporting. But I also never hold on to a position when the tape turns against me, regardless of how bullish the news might be. This discipline, this willingness to let the tape be the final arbiter, is what separates successful speculators from the crowd that gets wiped out. The crowd trades their opinions and emotions. We trade the tape. Let me share with you one of the most important discoveries I made about higher time frames versus news noise. The market tends to make its major turns when the news is most extreme. Think about that for a moment. Bull markets don't top when everything's uncertain and people are cautious. They top when the news is spectacularly good, when everyone's optimistic, when you can't find a bear anywhere. That's when the smart money is distributing to the enthusiastic public. Similarly, bear markets don't bottom when there's bad news. They bottom when the news is catastrophically awful, when everyone's given up hope, when people are selling at any price just to get out. That's when accumulation begins. If you're trading on news, you're buying tops and selling bottoms. You're doing exactly the opposite of what you should be doing. But if you're reading the tape, if you're watching those higher time frames, you can see the accumulation beginning while the news is still terrible. You can see the distribution starting while the news is still rosy. This is the edge that professionals have over amateurs. We're not smarter. We're not better at predicting the future. We're just watching what the market is actually doing instead of listening to what people say it should be doing. I want to talk about patience for a moment, because this is intimately connected to why higher time frames matter. The news creates urgency. Every headline implies you need to act now, that if you don't respond immediately, you'll miss the opportunity or fail to avoid the disaster. This urgency is the enemy of good trading. It forces you into decisions before you have clarity, before the tape has shown you the real direction. Higher time frames, by their nature, require patience. A weekly chart doesn't give you signals every day. A monthly chart might only give you a handful of clear signals per year. But those signals, when they come, are far more reliable than the dozens of conflicting signals you get from daily news and short-term price action. I learned to be patient the hard way. There were years when I made a dozen trades a week, constantly jumping in and out based on tips, news, hunches. And you know what I had to show for all that activity? Losses and stress. The years when I made real money were the years when I made just a handful of carefully chosen trades, when I waited for the higher time frame setup to be perfect, when I ignored the daily noise and stayed focused on the bigger picture. Activity is not the same as productivity in this business. In fact, they're usually inversely correlated. Here's a practice I want to recommend to everyone watching. For the next month, whenever you're tempted to make a trade based on news or a daily chart pattern, force yourself to first check the higher time frames. Look at the weekly chart. Is the news-driven move aligned with the weekly trend, or is it counter to it? Look at the monthly chart if you're planning to hold longer term. What's the bigger picture saying? I guarantee you that this simple practice will save you from numerous bad trades and help you identify the really high probability opportunities. And while we're talking about practices and learning, I have to tell you about something we've put together that I'm really excited about. We've just released a comprehensive ebook called Thinking Like Jesse Livermore, Mastering the Market with Discipline, Patience, and Risk. This isn't just another trading book filled with indicators and formulas. It's a deep dive into the psychological and strategic framework that made my approach to markets successful. We cover everything from reading the tape in detail, to position sizing, to managing your emotions during drawdowns, to understanding when to be aggressive and when to be defensive. If what I'm sharing in this video resonates with you, if you want to truly understand how to think like a professional speculator rather than just getting tips and tricks, this ebook is essential. The link is in the description below. I genuinely believe it can transform how you approach the markets. Now, as we come to the end here, I want to leave you with something to think about. The choice between following news and following the tape is really a choice about who you want to be as a trader. Do you want to be part of the reactive crowd, constantly buffeted by the latest headlines, always feeling uncertain and stressed? Or do you want to be someone who operates from a position of clarity, who understands that the market reveals its intentions through price action, who has the discipline to wait for high probability setups and the courage to act decisively when they appear? This isn't just about making money, though that's obviously important. It's about the quality of your experience in the markets. I've lived both ways. I've been the guy frantically reading every news item, calling my broker 5 times a day, unable to sleep because I'm worried about what some analyst might say tomorrow. And I've been the guy who checks the weekly charts on Sunday, makes my decisions based on clear, objective information, and then goes about my life with confidence because I know I'm aligned with what the market is actually doing. I can tell you without hesitation that the second way is not only more profitable, it's more peaceful, more sustainable, more satisfying. The tape doesn't lie. It doesn't have an agenda. It's not trying to sell you something or get clicks or make itself look smart. It's just the pure, unfiltered truth of what buyers and sellers are actually doing. When you learn to read it, when you trust it over the noise, you gain a kind of clarity that most people never experience in the markets. You stop being a victim of circumstances and become a strategic participant. You stop guessing and start knowing. You stop hoping and start acting from evidence. Every great speculator I've ever known or read about had this in common. They trusted what they could observe over what they were told. They developed their own methods for reading the market's true message, and they had the discipline to follow those methods even when it was uncomfortable, even when the crowd was going the other way. That's the path to consistent profitability. There are no shortcuts, no secret indicators, no guru who can do this for you. It's about you, the tape, and your willingness to subordinate your ego to what the market is showing you. So, I'm asking you to make a decision right now. Are you going to keep letting the news jerk you around, or are you going to commit to learning how to read the tape? Are you going to keep trading on opinions and hope, or are you going to develop the discipline to trade on evidence? The market will be here tomorrow, next week, next year, offering opportunities to those who can read it and taking money from those who can't. Which side of that equation do you want to be on? Before you go, do me a favor. Drop a comment below telling me your biggest challenge with following the tape versus reacting to news. What's stopping you from making this shift? And if you've already made it, what was the turning point for you? I learn from your experiences too, and this community we're building is about all of us getting better together. Also, check out the other videos on this channel. We've got content on position sizing, risk management, identifying trend changes, all the practical skills you need to implement what we've discussed today. And seriously, grab that ebook. It's the complete system. Everything I wish someone had told me when I was starting out. The markets are the greatest teacher you'll ever have, but they're a harsh teacher if you don't listen. The tape is speaking to you every day. The question is whether you're willing to listen, to observe without prejudice, to act with discipline. That's the path I've walked, with all its triumphs and disasters, and it's the only path I know that leads to real, sustainable success in speculation. The tape is waiting. Your future is waiting. It's time to tune out the noise and tune into what matters. Now, go out there and trade well.